Welcome to the deep dive. Today, we're taking a close look at Uber Technologies, ticker UBER.
Yep.
We've pulled together quite a bit financials, recent news, analyst
Right.
views. And the goal here, really, is to cut through the noise and figure out, what's driving Uber right now and what their prospects look like.
Exactly. We've looked at stock data, earnings calls, press releases, the works to give you that focused picture.
Okay, let's jump right in then. The stock, it's trading around, what, $90 currently?
Yeah, roughly $90. And interestingly, the average analyst price target is sitting right there as well.
Huh. So analysts think it's pretty much fairly valued right now. What's your take on the valuation metrics?
Well, yeah, that consensus target suggests that. Looking deeper, the PE ratio, price to earnings, is about 15. Forward PE is similar.
Okay.
Price to sales ratios are hovering between 3 and 4. And a key underlying number is their WACC, the weighted average cost of capital.
Yes, the WACC.
It's running at about 10.6%. That's basically the return they need to generate to keep investors happy.
Got it. Okay, moving to the actual financials. Over the last 12 months, revenue was significant, like $45 billion plus.
$45.38 billion, yeah.
But they still posted a net loss, right? About $259 million.
They did over the trailing 12 months. But, and this is a big but, Q1 of 2025 looked quite different.
Oh, okay. Tell us about Q1 then. Sounds like good news.
Definitely a strong quarter.
Hmm.
Monthly active platform consumers, MAPCs, were up 14% to 170 million. Total trips jumped 18%.
Wow.
And gross bookings and revenue both grew 14%. Importantly, that's also on a constant currency basis.
Right, stripping out the currency effects.
Exactly. But the real story, I think, was profitability.
Hmm.
Income from operations shot up to $1.2 billion, a huge improvement year over year.
Okay.
And adjusted EBITDA hit a record $1.9 billion. Their margins are clearly improving, plus strong free cash flow growth, up 66%.
That does sound like a turning point, and management seems to think this momentum carries into Q2.
That's what their guidance suggests. For Q2 25, they're aiming for gross bookings between, 45.75 billion and $47.25 billion.
Right. Which is pretty healthy growth.
Yeah, that's 16% to 20% year-over-year growth, constant currency. And they expect adjusted EBITDA between $2.02 billion and $2.12 billion.
Big jump there, too.
A very big jump, yeah. 29% to 35% growth compared to last year.
Okay. So massive scale, improving profitability. That brings us to their competitive advantage, their economic moat. The analysis calls it narrow. Why not wider?
Good question. The narrow rating reflects a few things. They definitely have the network effect. More riders attract more drivers, and vice versa. That's
Yeah.
powerful.
Mm-hmm.
Scale helps too, being the leader in so many places. And their membership program, plus merchant-funded offers, builds loyalty.
But
But it's an incredibly competitive space globally,
yeah,
with Lyft, Bolt, Didi, DoorDash, fierce rivals everywhere.
right.
Plus, operational challenges like insurance costs, especially in the U.S., are a drag. And there's always the legal and regulatory risk hanging over them. So narrow seems fair for now.
Makes sense. So given that competition, what are the key things that could keep Uber growing long term?
Well, there's still room to grow the user base and get people using the platform more often. The synergy between mobility and delivery is a big one, cross-selling services.
Yeah, I use both.
Exactly. Expanding into new cities, smaller towns. That's still happening. And growing newer stuff like, scooters, three-wheelers, integrating taxis.
Okay.
And then there's the whole autonomous vehicle angle. There are partnerships there could be transformative down the road.
Of course, with opportunity comes risk. What are the main clouds on the horizon investors should keep an eye on?
Competition is always number one, especially seeing consolidation in food delivery. Those U.S. insurance costs are a persistent headache, though they are trying to manage it.
Mm-hmm.
You always have to watch the macro economy. Any slowdown could hurt demand, though they haven't seen major signs yet. And that recent FTC lawsuit about billing needs watching. Legal risks are part of the game.
Strategically, they seem busy. Lots of partnerships, some acquisitions.
Yeah, they're active. The autonomous partnerships are key. Waymo, Pony AI, VW. Integrations like OpenTable and Delta SkyMiles embed them deeper into travel and dining.
Right.
The Trendyol acquisition in Turkey shows international focus. And they're adopting tech like AI for delivery and adding safety features, investing in the platform.
And how are the different parts of the business doing? Mobility and delivery are the big engines, right?
Absolutely. Both showed strong growth and better profitability in Q1. Delivery's adjusted EBITDA growth and margin expansion were particularly impressive.
Good incremental margins there.
Very strong. Even grocery and retail delivery are contributing positively now, at least on a variable basis.
Mhm.
Freight is still losing money, but less than before. It's much smaller, though.
Okay. We touched on analysts earlier. Average target around $90. Any recent specific analyst moves worth noting?
Yeah, there have been a few updates. Wells Fargo bumped their target to $90 recently. Bank of America Securities is a bit more bullish at $96.
So generally positive sentiment still.
Generally, yes, though opinions always vary.
Sure. What about insiders? Any significant buying or selling?
We did see some recent share sales by officers Jill Hazelbaker, Prashanth Mahendra-Raja. Pretty standard stuff sometimes. Also some stock awards to directors, which is typical compensation. Worth noting, but not necessarily alarming on its own.
Okay. And just wrapping up with recent news from May. Anything else stand out?
A few things. The partnership with Turo for peer-to-peer car sharing on Uber Rent is interesting. Expands their rental options.
Yeah.
The Hanzi verified thing with Uber Eats is kind of a fun marketing play. Partnership with iFood in Brazil expands their LATAM footprint.
Okay.
There was also an investor alert about a law firm investigation, something for investors to be aware of. And they did a $1 billion convertible notes offering. So typical corporate activity, really.
All right. So summing up this deep dive, Uber's showing strong recent financials, decent growth outlook, clear network advantages.
But faces intense competition, cost pressures like insurance, and ongoing regulatory scrutiny.
Exactly. It seems like they're executing well on driving growth and profitability simultaneously, leveraging that huge platform.
That's a fair assessment. They're navigating a complex environment, but the recent results are definitely encouraging.
So this analysis is based on everything we've seen up to today. Remember, things change fast. Always do your own research.
And that leaves you with a key thought. How will Uber balance investing in future growth, like autonomous tech or new markets, with the market's demand for consistent profit improvement?
That's the billion-dollar question, isn't it? And what's the real long-term impact if autonomous driving does become mainstream? Big questions for sure.
Definitely things to ponder as you watch Uber's story unfold.
Absolutely. We really hope this deep dive gave you some valuable insights. If you found this useful and want more focused analysis like this, please do subscribe to the channel.
Yeah, and hitting that bell icon really helps us out and ensures you don't miss future deep dives.
Your support lets us keep doing this. Thanks for diving deep with us today.